Positive for oil today, perhaps a delay in President Trump's big tariffs on the European Union, but traders are wary of this rising supply from OPEC+. We are joined by David Szybunka, Senior Portfolio Manager and Managing Director of the Energy Team at Canoe Financial. David, great to see you. Thanks very much indeed for joining us. Oil struggling. What is the main thing weighing on the crude price, would you say?
Yeah, like you brought it up, oil is up, oil is down. There's OPEC headlines. There's lots of things going on. Honestly, like I spent the last week marketing. It feels like our funds are down 30% on the year. We're actually flat. And so the temperature in the room is pretty low. I think I'd kind of point you towards a few different things. There's lots of mergers and acquisitions happening here the last couple of weeks. When we look at just a couple of deals in Saskatchewan, Strathcona sold assets to Tourmaline, more and more gas for Tourmaline. And then also you saw ARC do their condensate deal, they're already the largest condensate producers. They're buying more. And then Strathcona turned around and did a hostile bid on MEG. And so there's excitement happening there. When we look at kind of the federal energy minister here was in town in Calgary. He presented to a bunch of business people within Calgary. And I would say this is probably the most positive message we've heard in probably 10 years. And the bar is really low as it relates to energy policy, as a lot of people know. And then lastly, last Monday, Total came out and signed a 20-plus year LNG agreement on the West Coast, buying into Rockies LNG. I thought we weren't doing any LNG in Canada anymore. And so the bar is really low. Everyone is focused on oil and OPEC and oil headlines. But don't forget, you make money in energy and any asset class with positive rate of change, and there's some positive things happening in energy.
What does that unsolicited bid for MEG tell you?
You know what? Don't forget, the producers always close the arb, not the investors. The investors then react as those type of things happen. And I would just say capital's been leaving the energy sector for the better part of 1-2 years. We started to see valuation expansion happen for the better quality assets, specifically the MEGs of the world. Well, when you take that away, the producers always come in and price assets properly. And so the fact there's hostile bids happening in our backyard says, quit focusing so much on oil prices, focus more on there's certain assets in the basin that are mispriced. This will take care of itself over time.
Where do you see a bidding war for MEG? I mean, they're said to have very high quality assets.
They got great assets, 50-plus years of reserves. At the end of the day, guys like me aren't going to exactly know how this plays out, but MEG is then forced to go and hire a financial advisor with BMO and now listen to other bids. And so I would just say the company's in play, and we'll see how this all plays out.
What are your thoughts on natural gas? You say you are early to that trade, but others are warming up to it.
Yeah, this felt more comfortable for me last summer. Lowest gas prices in 20 years. Everyone liked oil. No one liked natural gas. We went overweight natural gas and power, took our oil weightings way down. And so consensus today definitely likes natural gas over oil. And so we recognize that. I think I'll try and paint this for investors, though, when you try and think through, okay, the party's a little more crowded. What does it all mean? When you look at the S&P 500, the S&P 500 is 50 trillion of market capitalization. When you look at Chevron and Exxon, those two companies alone are 700 billion of market capitalization. And then you look at the two largest gas companies in the US, Expand and EQT, it's only 60 billion of market capitalization. There's so little money relative to what I just told you on oil in the bigger picture of the market. If we kind of go over to the TSX is 4 trillion of market capitalization. The 4 largest oil sands guys are 235 billion, and your Tourmaline ARCs are only 40 billion. It's less than 1% of the market cap of the TSX. And so it doesn't take that many people to go sell a little oil down, buy a little gas. And this trade is happening right now. You can see it in the price action of the US gas companies today.
What do you mean? Sorry, how are you getting at the U.S. companies there? I mean, as you know, trading's shut down in the States, but what's the message being sent by U.S. natural gas investors, David?
Yeah, if I just played out, say, the price action in the stocks, I didn't mean today, I meant in the last week. And so,
oh, sure, yeah.
Look, our U.S. names have been rock stars. Our U.S. gas names are up 50-70% on the year, or sorry, in the last kind of 8 months or so, have had really good starts to the year. Mm-hmm. And when I kind of just look at them, even last Monday, as you recall, the U.S. market was open, the TSX was closed. you saw a big leg down in natural gas prices, but the stocks were green on the day. Then you come in the next day, you get the whole forward strip kind of moving up higher, and boom, these stocks are hitting 52-week highs. The price action in the kind of market last Wednesday, Thursday was kind of choppy. U.S. gas names are green. And so the fact that this price action is happening within these stocks, they just won't really go down. And I think it has to do with those market capitalization rotations I was talking to you about. A fun fact for you would just be, we get a lot of emails from the Goldman Sachs of the world. And I was reading a Goldman Sachs sales guy's email last week. And the most read piece by people at reading Goldman Sachs research in the last 30 days, the most read piece was their energy primer piece. And so this has nothing to do with oil prices or OPEC. This is this whole energy demand tied to AI and power, and tech companies are going to need power. How are they going to get this power? The generalist is trying to get up the curve on this, and you can feel kind of natural gas, uranium stocks getting a bit on that.
Well, speaking of natural gas, you have one idea for us. I think we've discussed this before, Advantage Energy.
Yeah, look, so when I look at how we've done, kind of our funds are up 25% last year, you're kind of riding these big natural gas companies. We still are doing that today within our funds. But why do you pay your energy manager? You pay your energy manager to know when to start kind of adding to certain intermediates as no one really likes them. If you just said, Andrew, look at your flow of funds, what's the temperature in the room on energy? No one likes it. My flows the last 12 months, as we just been watching the market, investors have been selling large caps to buy midstream and infrastructure. They've been selling intermediates to buy large caps. Everyone's just giving up on the party. Well, why don't we start zigging a little bit while others are zagging? And we started doing that 30 days ago with Advantage, taking up an intermediate natural gas producer as no one really likes the intermediates. And so this is the stuff that we're doing within the funds. And if the call is that these U.S. gas names and the Canadian ones keep doing good, ARC's at a 52-week high, Pato's at a 52-week high, Expand, EQT, if the call is that they're going to keep doing well, well, these other ones are going to play. And I think Advantage is going to participate in that.
David, always great talking to you. Thank you very much indeed.
Thanks a lot.
David Szybunka, Senior Portfolio Manager and Managing Director of the Energy Team at Canoe Financial.